Good afternoon. Welcome to the Heritage Foundation and our Lewis Lehrman Auditorium. We, of course, welcome those who join us on our heritage.org website and via C-SPAN on this occasion. I would ask everyone here in the house to check that cell phones have been turned off as a courtesy as we prepare to begin. And we do remind our internet viewers that questions can be submitted at any time simply emailing speaker@heritage.org. And we will post the program on the Heritage homepage following today's presentation for everyone's future reference. Hosting our discussion this afternoon is David Burton, Senior Fellow for Economic Policy in our Institute for Economic Freedom and Opportunity. He focuses on tax matters, securities law, entitlements, and regulatory and administrative law issues. Before joining us at Heritage, his professional career, including serving as General Counsel at the National Small Business Association, and Chief Financial Officer and General Counsel of the Alliance for Retirement Prosperity, and he was also a partner in the Argus Group, a Virginia-based public policy and government relations firm. Please join me in welcoming David Burton. David?
Welcome. Conservative first principles lead to a number of conclusions about tax policy. First, a conservative tax system will raise the revenue necessary to fund limited government with the least negative economic impact that is practical to achieve. This is accomplished by structuring a tax system to minimize the interference with free markets, to minimize the compliance costs of taxpayers, and to minimize tax administration costs. This in turn will lead to the highest level of economic output, economic growth, innovation, opportunity, job creation, real wages, and prosperity that's possible when raising a given amount of revenue. Second, a conservative tax system should seek to limit the tax system's adverse impact on the core institutions of civil society, including the family and voluntary associations, such as religious and educational institutions, charities, and community organizations. Third, a conservative tax system will be just, because a just political order protects individual rights to life, liberty, and property. A just tax system minimizes the derogation of those rights by imposing an equitable and reasonable burden on taxpayers, being general in application with special privileges for none, and respecting taxpayers' rights to due process. And lastly, a conservative tax system should be visible and understandable so as to accurately convey the true cost of government to the public. Now, this analysis leads to a number of specific policy recommendations. A conservative tax system would impose one flat or proportional tax rate and be neutral towards savings and investment, or stated differently, tax consumption. It would exempt the poor, but only the poor from tax. It would not impose a marriage penalty, and it would provide tax relief for families with children and would not impose taxes on the core voluntary associations that constitute civil society. There are, in principle, 4 ways to satisfy these conservative economic criteria: a Harabushka flat tax, a consumed income tax or cash flow tax, a business transfer tax, or a national sales tax. Today, we're examining the case for a national sales tax. The first national sales tax was introduced by Congressman Dan Schaefer and Billy Tozan in 1996. In 1999, Representative John Linder introduced the fair tax. The primary difference between the two plans is that the fair tax repeals payroll taxes and accordingly has a somewhat higher tax rate, statutory tax rate, to raise the same amount of revenue. Now, John Linder has retired, and a successor in Congress is our speaker today. Congressman Rob Woodall is today the lead sponsor of the fair tax. And the fair tax has 75 co-sponsors, and it is, in terms of co-sponsorship, by far the leading tax reform proposal in Congress. Today, Representative Woodall is going to speak to us and answer audience questions, and then get back to his work in Congress. Then we'll have 2 excellent panelists, Todd Mccracken, who is president of the National Small Business Association, and Karen Walby, who is research director of Americans for Fair Taxation. After their remarks, we'll have an additional question and answer session. One final note, the Heritage Foundation is doing a series of events on fundamental tax reform and the various issues raised by tax reform and various tax reform plans. We have 2 events coming up In the next month, on December 3rd at 11 a.m., Dr. Lawrence Kotlikoff of Boston University will be speaking on tax reform and economic growth. And on December 10th, former CBO Director Doug Holtz-Eakin and Tax Foundation President Scott Hodge will discuss how we might improve the tax policy-making process. Our speaker today is Representative Rob Woodall. He represents the 7th District of Georgia and serves on the House Rules Committee, the Budget Committee, the Committee on Oversight and Government Reform. He also serves as chairman of the Republican Study Committee. He was born and raised in Georgia. He received his undergraduate degree from Furman University and his law degree from the University of Georgia. I ask you that you not hold it against him that he's a lawyer. He was Congressman John Linder's chief of staff and was elected to Congress in 2010. I've known the congressman for a long time, and I can say with conviction that there's no better friend of the American taxpayer in Congress. He's the tip of the spear in the struggle to achieve tax reform. He's a tireless, articulate, and effective spokesman for tax reform, and I very much look forward to hearing what he has to say today. Thank you, Congressman. Please join me in welcoming Congressman Woodall.
David, I appreciate that. I can tell you that the night that I was elected 4 years ago, my mother looked at me and she said, "Rob, you've gone from being my favorite son to a lawyer to being a congressman. Just please don't go to jail." So I pray we're sliding down that scale. There's nothing that I could do to cheer up a rainy, cold, and dreary day in Washington, D.C. That would excite me more than talking about the fair tax. It is amazing to me where that the ability to dream the big dreams seems not to be present in this town anymore. It's hard to get something passed that just nibbles around the edges. How do you get something passed that actually changes the way that we think about our tax system, think about our relationship with the American tax collector? What I love about the fair tax, and folks ought to know if they don't, that the fair tax didn't come from Washington, D.C. The fair tax came from a group of civic leaders in Texas who had some success dealing with Texas's tort reform issues. As you now know, doctors are flocking into the state of Texas to practice because they were able to succeed in making medicine work for doctors and patients. These civic leaders got together and said, if we can do that for the state of Texas, what could we do for America as it relates to a tax system? How do we keep America competitive in the international world? Let's start with a blank sheet of paper and see what happens next. And that makes all the difference. Not some of the difference, all of the difference. I put a chart up that shows the average corporate tax rates of OECD countries and graphed that compared to the American tax rate, going back to the 1980s, going through 2010. Every tax reform proposal purports to deal with this tremendous disadvantage that America has in an international marketplace. But I put this up because it's striking to me that in these past 2 years, we've had a chairman of the Ways and Means Committee that has done more for tax reform than any other chairman in my memory. Going back 20 years, I can never think of a chairman that has worked harder to make the tax code make more sense for the American consumer and for the American family and for the American business than has Dave Camp from Michigan. He's retiring at the end of this year, as you all know, and we're going to lose a tremendous talent in Dave Camp. But when he got together to take on the most ambitious reform of the tax code that I have seen in my lifetime, he said, let's see if we can get the corporate income tax rate down to kind of that OECD country average, kind of that world international average. Let's see if we can get in there with everybody else. That's striking to me because it is the best effort, again, that I have seen in my lifetime. And it was an effort to see if we can be right there in the middle, if we can be mediocre. I don't know when it became true in America that when we set our goals on doing something, our goal is to be kind of like everybody else. Well, that's the way they do it in Europe. How it came to be that in America, when we decide that we want to make a difference, we look around at what everybody else is doing and say, let's be the same. I don't want to be the same. I want to lead. I want to lead. And what What we do with the corporate income tax rate and the fair tax is take it to zero for one reason and one reason only, and that is there's not a business on this planet that pays taxes. As you all know, businesses collect taxes. Consumers, final consumers, pay taxes. Walmart doesn't pay taxes. Walmart collects the tax from me when I go by and shop at Walmart. The case for the fair tax is that it is the only tax being discussed that does two things. Number one, it's the only tax being discussed that completely eliminates hidden taxes in the price of everything that we buy. I mean, you know how easy it is to get elected to Congress if your campaign promises, I'm going to take personal income tax rates down to zero, and I'm just going to make all those big bad corporations pay the bill. You know how easy that is to run as a campaign slogan? We're going to let you all off the hook. We're just going to tax Walmart, right? That's nonsense, but we can hide taxes from the American consumer, and we do it day in and day out. It's the only tax that makes transparent what the burden is on the American consumer. What is the cost of government today? I want you to think about that. Fair tax rate's set at 23%. It's a big number. It scares me sometimes when I think about it. Not entirely proud about telling people that I'm supporting a tax bill that is going to create a 23% consumption tax. But the reason we do that is because that's what it costs to fund the United States government as it exists today. Fair tax is not a bill about shrinking the size of government. It's a bill about fixing our tax code so that we can grow the size of the economy. 23 cents just happens to be what that marker is. We're the only ones who are honest with folks about what that number is. If it's too low, let's raise it, but we can be honest with folks about raising it. If it's too high, let's lower it, but we can be honest with folks about what the size and scope of government is. Second thing the fair tax does that absolutely no other tax proposal proposes to do is it eliminates the payroll tax. Payroll tax. You know, when I go into high schools and talk with senior classes, they'll talk about their part-time jobs. They know all about taxes now. Didn't know about taxes before they took on that part-time job, but they know all about taxes now. And the one they want to know about is that one called FICA. And what in the world are they getting for that? I don't know if you've looked at the numbers, but payroll tax is the largest tax that 80% of American families pay. I want you to think about that. How many Thanksgiving and Christmas dinners are going to be interrupted over the next 60 days with talk, dare I say, arguments about income taxes? Griping about income taxes, frustration about income taxes. I can't tell you how many there will be, but there will not be one conversation about the payroll tax, even though that's the largest tax that 80% of Americans pay. If you want to get the tax man off of the American entrepreneurs' back, off of the American families' back, if you want to create that thirst for production that I think is inherent in the American psyche, you've got to eliminate the largest tax that 80% of Americans pay, and that is that payroll tax. People often think about sales taxes as being regressive. It's the only proposal in all of Washington, D.C. that proposes to eliminate that tax burden that is the highest tax burden for 80% of American families. We've tried the income tax route. This chart up here on the wall shows the top marginal income tax rate going back to the Kennedy administration. Of course, John Kennedy was the original tax cutter. He cut that top marginal tax rate from 91% down to 70%, but he didn't bring in any more money. Across the top of this, I've graphed top marginal tax rates. Across the bottom of this, I've graphed individual tax receipts. And by I've graphed, I need to give credit where credit is due. The Heritage Foundation graphed this chart. They put out a tremendous group of economic charts to help people to understand the impact of Washington's decisions on our economy, on our families, on our businesses. This comes from their collection. And what you see here is that it does not matter how high or how low the income tax rate is. America is only willing to give you so much. The largest change in individual income tax receipts came during the Clinton administration. Not because the tax rate changed at all during the Clinton administration, but because the economy was on fire during those years in the 90s. And it turns out if folks are making more money, they're spending more money, they're paying more taxes. The secret to bringing in more revenue is a bigger economy, not a higher tax rate. The fair tax defines that, exemplifies that in ways that so many other programs miss. I take you back to 1997. In the midst of this giant economic explosion, the Joint Tax Committee had a symposium on how do you model a consumption tax. Right? It's hard for me to get the fair tax scored because it's not just nibbling around the edges. It's something completely different than we have ever done before. And so the Joint Tax Committee brought in economic analysts from the left and from the right, all across the political spectrum, 8 different macroeconomic groups, and said, tell us how you would model a switch in America to a consumption tax, like the fair tax. Well, they all went out and they came back months later. They all came back with different numbers, as you would imagine. But the one thing these 8 different macroeconomic analytical groups agreed on is that the American economy would grow faster under a consumption tax than under the current tax system. Now, the liberals thought it would just grow a little bit faster. The conservatives thought it would grow a whole lot faster. But the area of agreement is we can do better, and the pathway to doing better has to do with getting us out of the business of marginal tax rates. It also has getting us out of the business of tax expenditures. People ask, Rob, what's the biggest challenge to getting the fair tax passed in Washington? I say really smart people. Biggest problem we have to getting the fair tax passed is all the people who are really smart in Washington, D.C. Because it turns out if you're really smart, you've got an idea about how we can use the tax code to make somebody else's life better. You do. You think, look deep into your heart. Everyone in this room has an idea about how if only we manipulated the tax code in this way or that way, we could affect the behavior of America, and that would make America better. Top tax expenditures in the budget, employer-provided health care, home mortgage interest deduction, preferential rates for dividends and capital gains. It goes on down to Medicare benefits, exclusion for pension savings, and the earned income tax credit. The fair tax goes to 0 tax expenditures, 0 exceptions, 0 exemptions. If you don't turn the whole system on its head, it's hard to change the association that folks have with these tax expenditures and their quality of life. When Milton Friedman was asked when he was testifying before George Bush's Tax Advisory Commission, they said, what would be the easiest way to make sure that we don't have a new tax code littered with all of these deductions and exemptions? And he said, start out with a tax code that has absolutely none. Start out with a tax code that has absolutely no exceptions, deductions, exemptions, special carve-outs. Because if there's a good reason to put 1 in there, I can probably make a good case to put in 2, and then 3, and then 4, and then 5. And isn't that the way we arrived at the income tax that we have today? I don't dispute that there is value in each one of these tax expenditures. What I dispute is that the tax code is the best place to implement social policy. Social policy is the best place to implement social policy. Tax policy is the best place to collect taxes. Fair tax, no deductions, no exemptions. Folks pay that fair tax on absolutely every new good or service that they buy. Eliminating those distortions from the economy, huge difference in terms of utilization of capital. This one's titled America the Self-Destructive. It's put together by the Tax Foundation. Tax Foundation, as you know, annually ranks folks by tax competitiveness. Our friends in Estonia are at number 1 on the list. United States is down at number 32. I don't believe there's a worker in the world that works harder than the American worker. I don't believe there's an infrastructure in the world that's better than the American infrastructure. I don't think there's a people on the planet that is more committed to economic success, and they drive that one family, one worker, one entrepreneur at the time. I don't think there's anyone who does that better than we do. But we have handicapped ourselves, and the fair tax aims to wipe that slate clean. If you've been in this town for a little while, you've watched all of the machinations of trying to get a rebatable tax code to the American border. It's hard to do. Now, many folks who are in the currency business would say, but we sort that out in the price of currency. It's not that big a deal, but it's a big enough deal that most countries in the world are focused on succeeding at it. How do we keep our tax consequences from burdening the price of goods that we're shipping overseas? Well, those countries that use VAT taxes rebate the VAT tax at the border, as you know, and those goods come here tax-free. For us, we have no such alternative. The fair tax solves that issue. Doesn't just remove income taxes from the price of production, but remove payroll taxes from the price of production as well. Again, having an honest conversation about what the size and scope of government is and how much that costs the American consumer. I go back to that chart that we looked at on the top marginal tax rates and individual income tax receipts. At its most volatile, that period of time between 1990 and 2000, because the economy grew so fast, we added 3% to our individual tax receipts. 3%. In the best case scenario of the past 90 years, we added 3%. Not because of different rates, but because of a better economy. Our economy is out of whack today in a way that 3% won't do it. Our revenues and our expenses are out of whack in a way that 3% won't do it. The best solution we have is a growing economy, and again, everyone agrees that a consumption tax moves us a little closer in that direction. And I'll close with this. It's interesting to watch what happens across the street in the Capitol with a member's voting card in your hand. And what happens, and I should have intuited it, and I didn't. What happens is when things are going well, all of those smart people I told you about have lots of places they would like to spend all the extra money that's coming in. Good places. Spend it on children and daycare. Spend it on children and education. Spend it on children and higher education. Spend it on workers and retraining. The list goes on and on and on. Things that you and I would contribute to out of our own pocket because they are worthy causes. So when the economy is going like gangbusters, we're bringing in money hand over fist in the federal treasury because the only people who pay taxes are people who have a job and a paycheck. Those paychecks get bigger. Federal receipts get bigger. But when the inevitable cycle comes, and those receipts shrink because paychecks shrink and jobs shrink, we've now become accustomed to a brand new level of spending, and we borrow the spread until we get back into another cycle where our amplitude of tax receipts goes even higher and we begin to spend even more money. The amplitude of volatility of income taxes compared to sales taxes is night and day. The enemy of the federal budgeting process isn't that we don't have enough money one year. It's that we have much, much too much the next. Smoothing out that volatility, having a more predictable revenue stream makes all the difference in federal budgeting policy. Fair tax, consumption taxes provide that certainty in ways that income taxes never can. Again, you're making my day better by letting me come around here and talk about federal tax policy, particularly federal fair tax policy. Had we been talking about federal income tax policy, it would have made my day worse instead of better. And I'm here with three of the finest minds you could have on this topic. David was one of the very first folks I met when I came to Capitol Hill. Has forgotten more about the machinations of tax solutions than I will ever know. Todd has been leading a group that knows that you make big changes from the grassroots up, and has been involving folks back home and around the country in making decisions and making a difference for as long as I have known him. And Karen Walby doing the predictive work, the I dare say not the glamorous work of the fair tax, grinding through numbers after numbers after numbers and putting it in terms that the rest of us can understand, makes all the difference in the world for the cause, and I'm grateful to her for it. Just to be clear, I'm the guy who introduces the fair tax on Capitol Hill. I'm the guy who adds the new co-sponsors to the fair tax on Capitol Hill, but it's the grassroots organization across the country that is going to pass the fair tax on Capitol Hill. And every time you see a new member of Congress who's added their name as a co-sponsor, you know it was not because of my power of persuasion, not my charisma, but because a group of constituents back home said, you know what, Congressman, you know what, Senator, there's a better way, and it's called the fair tax. Let me work with you to get it done. And as David said, we now have more courageous co-sponsors of the fair tax than any other fundamental tax reform bill on Capitol Hill, and it matters. Anything on anybody's mind?
Any questions that people would like to ask? Laura? Just generally, please state your name and institutional affiliation.
Laura Truman with the Heritage Foundation. I wanted to ask about the impact on Social Security. So one of the things, maybe the average Joe on the street doesn't know Social Security is in trouble, but those of us who watch numbers, by having a designated trust fund and a designated tax, we can see the imbalance. But if you get rid of the payroll tax and you fund it out of general taxes, then some of that sense of it gobbling up all the tax income or having a shortfall goes away. So how do you handle that?
Laura, you'll remember that President Bush chose in his second term, was he going to take on tax reform or was he going to take on Social Security reform? He chose Social Security reform, and it was so difficult, not many folks today could tell you what progress was made in those 4 years. We didn't want to have to take on both at the same time. Both of them are critical, and both need to be taken on. We tried to just take on tax policy and leave the social policy of Social Security for another day. And to do that, then, we locked in, based on payroll as it exists and as it changes, we locked in a formula that said the Social Security Trust Fund will continue to receive exactly the same revenues that it would have received had we continued to fund it under a payroll formula. But again, payroll has proven inadequate to fund the Social Security system. Rather than tying the fitness of the Social Security Trust Fund to the payroll base, I want to tie it to the size of the economy, which is what we do in a fair tax world. We can grow the receipts that we have. Preventing bankruptcy would not be the right terminology, but our options for dealing with Social Security's fiscal future will be better if we have a wider revenue stream coming in. If I could choose one of the easy things, the low-hanging fruit that we could do in the next 2 years, passing tax reform requires a president who believes in tax reform, and I hope we can have that. But we all know what it takes to solve the Social Security problem. You either have to do something with benefits or you have to do something with revenue. And my great hope is that we will take some of the early steps to solve that issue in these next 2 years, which makes then tying the fair tax into the two even easier. Most folks don't understand the progressive nature of Social Security payments, and if young people today are saying they're more likely to see a UFO in their lifetime than a Social Security check, as we know that they are, the time to have that honest conversation with folks about what the Social Security system has become and what its options are for the future is now.
Next question, sir.
Nick Farmer.
Just 1 second.
Retired. Nick Farmer, retired citizen. You talked about the fair tax being revenue neutral. Mm-hmm. What about distributional neutral? How does it change the distribution of taxes paid?
When Dave Camp set about doing fundamental tax reform, he committed himself to keeping the same distributional analysis that we have today. It was incredibly constraining. When the top 1% of income earners are paying the bulk of the taxes today, they won't be doing the bulk of the consuming tomorrow. Rather than target trying to keep the entire distributional table the same, we try to target improving the distributional table for the lowest income Americans. When I think about who needs attention from the tax code, it is often not those folks who are being brought down by the tax code. It's the folks the tax code isn't letting get up. When I'm a high income earner, I can adjust my income and bring it in any way I want to and bring it in at the lowest rates possible, which is why even when the top tax rate's 90%, Americans weren't paying any more than they were when the top tax rate was 28%. But low income earners don't have any choices. All they can do is go to work for a paycheck every day. Eliminating the payroll tax changes the distributional analysis for them in ways that no other proposal does. When President Bush's advisory panel was looking, they released their preliminary July 2005 report and found that no proposal they were examining did more for low-income Americans than did the fair tax. I can't guarantee what taxes you'll pay under the fair tax. What I can guarantee is you'll have control over those taxes. By taxing you on what you consume rather than on what you produce, it brings your relationship as a funder of the American government enterprise into a much more controlled. We're going to discourage consumption, perhaps, but we're not going to discourage production, which is what we need not just from folks at the top of the income spectrum, but what we need from folks at the bottom of the income spectrum as well. It will absolutely change the distributional tables, but it will put the outcome of those into individual consumers' hands.
This gentleman.
Hermes Levy. The lottery have been regarded as regressive taxes.
Mm-hmm.
How will the fair tax deal with lotteries?
Well, it's my least favorite part of the fair tax. I'll just tell you that up front. But it's called the prebate. I want you to think about what happens at the tax writing committees. Well, I don't want to tax people for diapers that they're buying for their children, because that's kind of important. I don't want to tax folks on food that they're buying. I really hate to tax people on their prescription drugs and not the calculator for school. The list goes on and on and on. If we let ourselves get into that cycle, as so many states do, of what is worthy to be taxed and what's not. If you buy 12 donuts, you do get taxed because that's a dozen donuts. But if you buy 13, well, that's a wholesale purchase of donuts, so you don't get taxed. We don't want to be in that business as federal legislators. So we created the prebate, which takes a look at the federal poverty line as created by Health and Human Services based on family size, and said, listen, nobody should have to pay taxes on the purchase of those essential goods defined in the poverty line. So we'll just give folks a rebate, and we'll give it to them early, of the taxes they would pay on all of those goods up to the poverty level. But because we do that for every American, we don't have to find out how much money you make. We don't have to find out where you make it. We don't have to track you down. Think about this. The only relationship you will have as an individual American citizen with the federal government as it pertains to taxes is filing your postcard that says, this is my name and this is how many children I have and here are our Social Security numbers. That's it. That's it. The involvement of the American taxman in the American consumer's life is over forever. And you can only do that if you find a one-size-fits-all kind of a process to deal with exceptions, exemptions, deductions. For us, that's called the prebate, and it's based on family size.
Any other questions? Hearing none?
I'll take that as a wide acclamation, an endorsement of everyone in this room for the fair tax. I will carry that proxy back across to the Capitol now and see what we can do. Again, you've made my Monday a little bit better by coming over and talking about good news.
Well, thank you very much for coming.
Thanks, Dave.
Appreciate your
All righty.
Oops. Thanks once again to the Congressman. We'll now have our two panel guests, and I will quickly introduce them and then hand it over to them. Our first will be Todd Mccracken, who is president of the National Small Business Association, which is the oldest and second largest small business advocacy group in the United States. He became president of NSBA in 1997, and previously he joined the association in 1988, previously serving as vice president of government affairs. He's testified before Congress on numerous occasions, appeared on a wide variety of television shows, and published in most of the leading newspapers in the country. He is a native of New Mexico, and he received his BA in economics from Trinity University in San Antonio, Texas. Dr. Karen Walby is the research director at Americans for Fair Taxation. Their website's fairtax.org, and they sometimes go by that name. She has 20 years of experience in federal and state tax policy analysis, having worked in that capacity for 3 Florida governors, 2 Democrats and 1 Republican. She's also worked for the Taxation and Budget Reform Commission of the Florida Legislature and worked in the private sector and as Director of Research for Florida Tax Watch. She has also served as an adjunct professor at Florida State University. Please join me in welcoming Todd Mccracken. And you can either stay there or come up here. What do you want to do?
Well, I'm using slides, so I'll have to go over there. But you're welcome to sit.
Thank you, David. It's very good to be here today. I really appreciate the opportunity to talk about the fair tax. It's a topic that we need to talk about a little bit more because it clearly is the best system of taxation, we believe, for not just Americans overall, but specifically for the small businesses that we represent. We've been advocates of the fair tax now for a number of years. I think we were one of the very first groups to endorse the tax, and it's because the small business community it faces virtually every aspect of our tax system that I think we have been so committed to it. We stop and think about it. If you own a business, you're one of the few people in the country that faces doesn't have to pay personal income taxes, business taxes, local taxes, payroll taxes. Not only do you have to pay all those taxes, and I could list a whole bunch more, but you have to administer that whole tax system on behalf of the federal government. You have to withhold from your employees. You have to deal with sales taxes for the states and localities if you do that. So small businesses are the only ones that face essentially the full brunt of everything our tax system has to offer. And not only that, I'd also like to point out that as much as our members hate paying taxes and think they pay too much in taxes, when you ask them what the biggest burden of the tax system is, they tell you it is actually the administration of the taxes, the complexity and the burden and the time that it requires of them week in and week out to deal with the income tax system and the payroll tax system and the estate tax system and the excise tax system that we have in the country today. And you think about it from the current system we have, especially the income tax, but also the payroll tax, it discourages entrepreneurs and entrepreneurship at virtually every level. Most every entrepreneur, that is unless they sell tax shelters, see our system as punishing entrepreneurship and the American dream. At every stage of a business's life, it faces significant tax obstacles. At the startup level, savings are taxed, the startup costs are not deductible, capital investments are made with after-tax dollars and then taxed multiple times when the income is earned and when the underlying assets that generate that income stream is sold. They are taxed when growing because the government takes an increasing share of income as more money is made. They are taxed when exporting because U.S. taxes raise the price of our goods relative to foreign goods. They are taxed when they add jobs because our extraordinarily high payroll taxes increase the cost of hiring. Family businesses are discouraged because they are taxed when they are sold. And finally, the owner gets to meet the undertaker and the IRS on the same day as the government effects a leveraged buyout of the business. The payroll tax burden is one of the things that really attracts us to the fair tax. The payroll tax burden that small businesses face is enormous. It adds greatly to their cost of employment. Most workers, while they see the FICA tax that the congressman alluded to in his talk on their paycheck, they don't see the other half of that bill that employers have to pay, and that essentially work to both depress their wages, but also, to the extent it doesn't, increase the wages that the employers have to pay for those. The other thing that we have to think about from the small business perspective is the payroll tax system is one of the primary sources of fines that they have to pay because they have to remit those payroll taxes on behalf of their employees and themselves. Anytime there's a mistake or an error, which happen when they do this every 2 weeks, they wind up with a letter, a fine, a notice from the IRS that they have to deal with. So it's both money out of the pocket of those small businesses, but also an enormous amount of time that they have to deal with. The other, of course, aspect of the whole system is the unnecessary complexity that we deal with in our system the small business community pays the lion's share of the overall compliance costs of our tax system, which are in the hundreds of billions of dollars every year that are paid in order to just administer the tax system, to hire the CPAs, to have a work that is not getting done in the business. So to think about essentially removing those hundreds of billions of dollars is extremely attractive to the small business community. So we think to deal with these problems, the fair tax clearly is the best system. It has enormous simplicity and compliance costs. When you boil it all down, the only question that businesses, I should say, are the only entities who have to deal with the fair tax on a compliance and administrative basis. And the only question they would have at the end of the year, how much did you sell to consumers? Calculate the tax, send it in, you're done. That's all there is to it, compared to all the layers that I've just described for you here today. And for most of those companies that are administering that sales tax, they're already administering a sales tax in their states. So the type of administration wouldn't be fundamentally different from what they're already having to do right now. The other one of the other main benefits is the visibility and understanding that Congressman Woodall described. The cost of the government will be right there in front of everyone to see on every purchase they make every day. And so I actually think that's one of the ways that actually would point out the ever-growing and increasing cost of our entitlement system, is that every time those costs went up, the sales tax would go up commensurately, and people would ultimately know why. Economic growth, of course. Small companies would be unshackled from this system. It would be easier to start a company, it would be easier to grow a company, there would be greater rewards for growing a company. All of that would inevitably lead to greater economic growth and the need for less of a need for a higher tax rate. It would, as the Congressman again said, it would improve our international trade position. And the other issue that I would like to raise before it comes up, people often ask me, as an advocate for small companies, why are you for the fair tax? Because small businesses will wind up being some of the only people that actually have to deal with the tax system. And why don't you feel burdened, especially your retailers? Why is this good for retailers? And I point out that every retailer, virtually every retailer, I should say, in the country right now has to deal with the sales tax today. But they also have to deal with income taxes, the payroll taxes, and all the rest of the plethora of things that I've already mentioned. If we have the fair tax, all of that goes away for those retailers. The only thing they have to deal with is that sales tax. So while, yes, they may be more burdened by the administration of tax code than the typical consumer, they'll be vastly less burdened than they are by the system that we have today. So for all of those reasons, and I would say many, many more that I could get into if we had all the time in the world this afternoon, which we don't, we've been strong advocates of the fair tax, and hope that the Congressman has good luck today in his efforts to convince his colleagues to get on board. And with that, I'll end and take your questions. Thank you.
Karen.
Well, hello. Congressman Woodall and Todd have done a good job, I think, of laying down the basics of the fair tax. What I'm going to focus on is the economics of it, and I'm going to do that with graphics rather than a lot of dull economics terminology. Hopefully you will think that. So the first thing that we need to look at with the fair tax is, what is the base of the fair tax? It's a consumption tax, destination principle. It's neutral between savings and consumption. It's neutral among types of investment, neutral between capital and labor. And I forgot to do my slides. Where is the, oh. There we go. Neutral between foreign-produced and U.S.-produced goods, and it is broader than it has a broader base than the current system, and that's significant because broader base allows for lower rates. And lower rates allow for less distortion in the economic system and promote higher growth. All right, Congressman Woodall was talking about the consumption base and how it's a more stable base than the income tax base. And so what this graph shows is a comparison between AGI there, adjusted gross income, and PCE is personal consumption expenditures. It's not exactly the same as the fair tax base because it has some things in it that the fair tax doesn't tax, like the value to you of your house. What would it be if you collected rent on your own house? That's included in personal consumption expenditures, and the fair tax also includes government consumption. But anyway, it's a good parallel. And the adjusted gross income is the basic base of the income tax. And you can see over time since 1975, I started with that because of the big recession in that time. And personal consumption expenditures have had a steady growth every year since then, with the base always growing. An estimate for 2012 of the fair tax base, the PCE there is about 11 trillion, and actual estimate of the fair tax base is 12 trillion. Okay. The next graph addresses the point about stability. The problem with the income tax is you have busts and booms. When you're coming out of a recession, at least it used to be that way. It's not that way this time, but normally you have a burst of economic growth and then the income goes way up, and then you have a big growth in tax revenues, and let's see that we can fund all these things with that. And then when you hit the next recession, you have a level of spending that you can't sustain. And then you get into, where we are now, borrowing, 40% of what we're spending or something close to that range. The thing I want you just to observe from this, though, is that the red line is the income tax base changed from year to year, and you can see that the ups and downs are much more variable than they are for the personal consumption expenditures curve. Actually, adjusted gross income goes as low as a negative 7% growth in 2009. And in that year, was a bad year. In that year, consumption went down less than 2%. So that is another reason why the consumption would be a better tax base. So how does the fair tax boost economic growth? The broader base allows for lower marginal rates, and lower marginal rates result in greater work savings and investment, and those in turn result in higher productivity and lower costs, which then result in increasing jobs and wages. So it does benefit. The benefit does go to the worker. It levels the international playing field. It treats U.S. businesses and foreign business activity the same. It would bring corporate headquarters to the U.S. or keep them here. The ones that are staying, we've all heard recently about corporate headquarters leaving because of the very high corporate tax rate in the U.S., but also attract production because the system is border adjusted. The taxes from the producing company or country are taken out. So all in all, it'll result in the most attractive investment climate in the world if we implemented this system with a zero tax base, a zero corporate rate and a territorial system and equal treatment between foreign produced goods and U.S. produced goods. Here's just a table that summarizes how strongly disadvantaged the U.S. production is. In the red, you see that for goods sold in the U.S. market, they pay, both the income and payroll taxes are in the cost of American goods sold in the U.S. Foreign goods sold in the U.S. don't have that burden in their costs, and so it gives them a definite price advantage. It's been estimated as much as around 18%. Goods sold in foreign markets, we don't have what's called a border adjustable tax system, so when U.S. goods are sold in foreign countries, they still have the burden of the income tax and payroll tax included in the cost of the good, and then makes them non-competitive overseas. Now, when you go to the fair tax, it levels the playing field. You can see in American goods sold in the U.S., they pay the fair tax. Foreign goods sold in the U.S., they pay the fair tax. American goods sold in a foreign country, they pay that country's, the foreign VAT. The foreign production, when they sell goods in a foreign country, pay the foreign VAT. So it's exactly equivalent. It totally removes the disadvantage to American producers. All right, now we're going to quantify a little bit, give you some examples of research studies that have estimated just how much will the fair tax affect economic growth. This first study here was done by Beacon Hill. And what you're seeing there, the way economic models work is they estimate the current system and then they introduce change into the model that reflects whatever the tax law change is. And then they estimate what forecast the economic variables under those assumptions. And so you're comparing what would happen under the fair tax to what would happen under the base case, which is what is expected to happen if the existing system remains in place. And you can see here, this study looked at the impact of the fair tax on real GDP, jobs, investment, and wages. And so we have year 1, year 5, and year 10. So you can see in absolutely every variable there, the fair tax has an immediate effect in year 1. It's still going in year 5, and it continues even by the 10th year to have a pronounced effect. And what's especially important is the investment. You can see how huge the increase in investment would be. That's from removing the economic distortions in the tax system and not discriminating against savings and investment. This is a similar study, a little bit different model. It also looks at the impact on economic growth in year 1, year 5, and year 10. And I have to point out a missing decimal point there. Real GDP, that first column over there, that should be 2, 9, and 11%. 2% in year 1, 9% in year 5, and 11% in year 10. But it shows very similar results with all the getting an immediate economic impact in the first year and it persisting well beyond 10 years. The studies went out 25, but I figured this would give you the idea. Even consumption goes up. The fourth column there. Some people try to say consumption will fall because you're taxing consumption, but it doesn't. People have, when no income tax and no payroll tax, they have more money in their pockets and they have more ability to spend. DPI, that's disposable personal income. That shows that even when you take the tax into account, that they have to pay tax on everything they buy, their spendable income is still higher than what it would be under the existing system. This study measures a concept we call a welfare gain. It looks over the long run. Basically, you could equate welfare gain. You could think of it similar to an increase in economic well-being, increase in purchasing power. And it shows that for all three income groups, low, middle, and high income, that their welfare gain all improves for each group. And the red bars, that's for the low income, and you can see that they get the greatest improvement. The middle income, the green bar, getting the second best improvement, and the, I guess that's blue, being the high income, also improved, but much less so. So it is a very progressive result. And getting into the topic of progressivity and how the fair tax and the poor, the current system harms the working poor. The benefit of the tax loopholes goes to the wealthy. It's justified that you need a home mortgage deduction so people at the lower income levels can buy a home. Well, that's baloney, basically. I'll show you the data that proves it. And the payroll tax is highly regressive. The income tax, you get a standard deduction and personal exemptions. On the payroll tax, they don't apply. So you may not pay income tax on the, say, first $10,000 or $20,000, depending on your family size. But on payroll tax, you pay that tax on the first dollar. You pay it on every dollar up until $117,000, I think it is. The system also harms the poor in that the higher rates of the income tax reduce investment, which reduces productivity, which reduces wages. So in the end, it impacts the worker. And there's very high marginal tax rates on the working poor, which hurts their mobility. There's really a disincentive to, at certain levels in the system where the earned income tax credit phases out, that it doesn't really pay them to work any harder or anymore. Congresswoman Woodall was talking about the payroll taxes there. That's the example across all the various income groups, showing that what the proportion is of each income group that pay more payroll taxes than income taxes. Yet, payroll taxes aren't ever talked about. They're kind of the hidden secret of the tax system, which are very regressive. I mentioned that all these tax expenditures that Congresswoman Woodall went through, it'd be good not to do this, and we should have an incentive for that. Well, the first one, the mortgage interest, you see there the blue bar the people making less than 50,000 only get 2% of the benefit of the tax deduction. The 82% of it goes to those making more than 100,000. Likewise, we need the charitable contribution deduction. That benefits the poor because charities do things for the poor. Well, I won't get into that one, but a lot of charity goes to places that never flow any money to the poor. But anyway, they only get 1.6% benefit of the charitable contributions, and 87% of it goes to the well-off. And then even if you take all those tax expenditures, all those itemized deductions, and combine them together, the low income only get 14% compared to 61% for the well-off. You know, so the people say, well, you can't get rid of all the exemptions. We need those. They benefit the poor. They do not. The fair tax is progressive. They try to put the regressive label on the fair tax because it's a sales tax. Well, it is a broad-based consumption tax that exempts the poor completely. They take the poverty, like Congressman Woodall said, they take the poverty level spending, which is based on family size. It's different for every family. And that amount of spending is tax-free. So this shows the effect of the prebate, the fact that people get refunded the taxes they pay on spending up to the poverty level. So I took a particular family here, 2-adult, 2-child household. The poverty level for a 2-adult, 2-child household is $31,460. They would pay zero tax under the fair tax. And the median income, which is somewhere in the 50s to 60s, they would only pay about 10 to 11%. So while the fair tax rate of 23 is the same for everybody, because of the prebate, the actual tax rate they pay is much lower. This is a study, somebody asked a question about distribution. This is a study that looks at the effective tax burden over the individual or the family's lifetime. This is a very clever approach, actually. Dr. Kotlikoff, who's going to be speaking here in December, he took families, he created these families, and he gave them a income earning history that was the real world, goes up and down, and when the expenses are higher when they have the kids and when they go to college and all that. Anyway, he created a spending history and a income history, and then he figured out what the income taxes would be for somebody who had that income history, spending history, and then he figured out what the fair tax would be. And without getting a whole lot of detail here, the current system is the red bars, and you can see for every income group there in his simulation, the current system effective tax burden is higher than it is under the fair tax, the green bar. What I do need to point out is this is a very good approach at looking at the distribution of the tax burden, because it takes taxes minus Social Security benefits received. You're paying your taxes and you get something back. So that is very good at showing the true burden of the tax system. Okay, on charitable giving, they say charitable deductions will go away. The point I want to make here is that economic growth drives the deductions. It stays about 2% of GDP for the last 50 years, so the best thing that can happen for charitable deductions is for the economy to grow. I'm going to skip the housing part because that's kind of complicated to explain here in a short amount of time. So I do want to wrap up with why I think the fair tax is the best tax reform plan. It promotes economic growth, which results in higher wages. It places U.S. workers in business on an equal footing with the foreign competition. It's fair and simple, transparent and understandable, and uniquely, everybody pays the tax. Even though we say the poor pay no tax, that's because it gets rebated back to them. But when they go to the store and buy something, their bill has the tax on the bottom and they pay. But then the government picks up the tab. But they see the cost of government. Thank you.
Thank you very much, Karen. All right, we have a few minutes left for any questions of the two panelists. All right, we have a question that came across the internet. It says, if I understand it correctly, Social Security payouts are based on what is paid in. How does that play out under the Fair Tax Act? If you want to answer it, it's fine. Otherwise, I know the answer.
Go ahead. I know the answer too, but you haven't been talking lately.
The Fair Tax Bill is written so that an amount goes into the Social Security trust funds that is equivalent to the amount that would have gone in if the payroll tax remained in place, and the benefit formulas key off of wages and would be precisely the same as today. Employers would report the wages to SSA just as they do today, and the benefits would be precisely the same as they are today. So in terms of the basic benefit structure, nothing would change. It would simply be the source of the revenue flowing into the trust funds is sales tax revenue rather than payroll tax revenue. All right, well, thank you all very much for coming, and we will conclude this event. Again, the next two events are Dr. Kotlikoff along with three panelists on economic growth on December 3rd at 11 o'clock, and the 10th of December, Doug Holtz-Eakin, former CBO director, and Scott Hodge, president of Tax Foundation, will speak here on how we can improve the tax policy process, which really means revenue estimates, distributional analysis, transparency, and how we do tax expenditures, and both the Congressional Budget Act, the JCT, and the CBO. Thanks again. Have a good day.